Welcome to the Real Estate Show on KMED. November the 5th is our date. Pete Belcastro and Joe Brett, the real estate guys, with you. We're both real estate brokers with John L. Scott in Southern Oregon, and we get together with you once a week here on KMED. We'll talk about all sorts of real estate-related issues and topics. In 7.5 years and 350-some shows, we're still around here, which is somewhat surprising. And, Joe Brett, we are celebrating another anniversary, that next month. We'll be real estate brokers 10 years.
That's
Can
correct.
you believe
That's
that?
That's a pretty good stretch,
10 years. Wow.
It doesn't seem like that long ago that we were sweating bullets,
studying that
taking our
test.
final in downtown Medford on Riverside Avenue in Medford.
Yeah. And Joe got you got like almost 100% on the test. I remember that. You were great.
Man, if I'd have done that well in college, I wouldn't be working here right now. I'll tell you that.
Anyway, today on the show, Guy Giles, is our resident expert when it comes to all things mortgage interest rates, and he's in the house today as well. So, Guy, first of all, nice to have you here. How are you doing?
Oh man, it's good to be back.
I was going to say, and I want to just acknowledge something here, Joe, because Guy, I don't know if you even know this, but Guy has been gone for I think 12 days. You were gone. Tell people what you did, because what a neat, wonderful volunteer thing that you did.
Well, we went down to Louisiana, the last flood that they had down in Baton Rouge, and we just mucked out houses for days with Helping Hands and Samaritan's Purse. So it was a good way to give things back.
Yeah.
Today's kind of my first day back in the office, and had computer guys all morning, and now the radio show. So I feel like I'm not even back to work yet, but I'm ready to go.
Some of that stuff is not very nice that you were cleaning out there either.
Can you imagine that with the humidity and the
job
stuff like that down there? Ugh. Well, anyway, what a neat thing to do. So welcome here as well. And also in the house here today is Larry Cogdell, who's a certified financial planner. He's joined us today. And Larry, people may remember, was on KCMX. Actually, I remember listening to you years ago, right? How long did you do that, Larry?
14 years.
14 years. You gave financial advice, right, over the radio.
That's correct.
Yeah. You missed that?
I do miss it. I missed it a lot.
Yeah.
It was a lot of fun.
Yeah.
It was a blast. So here I am again.
Yeah, and still surviving. Everybody survived the recession. People,
And by the way, just as a point of interest, I also survived about 14 floods in New Orleans, because that's where I'm from.
Wow.
Right. Wow. Yeah. I guess you would.
Katrina did us in, though.
And Larry, I think you're a lot like Pete and I and Guy and the road gardener, Stan Mapolsky, who comes before us, is that we just love to share local information through our local media markets. So good to have you aboard, and we'll look for some more good stuff today.
Thanks for having me.
Right. Well, Guy, before we talk about some of the things with Larry about financial planning, just bring our listeners up to date on kind of mortgage rates. Every time I open the Mail Tribune, the Feds are going to raise rates, and they haven't yet. And
why don't you get Janet on the show? And
she won't take my calls.
My gosh, we need a better producer.
Yeah. So what's going on there with that, Guy, in terms of interest rates right now? They're still pretty darn good.
They've ticked up just a little bit, but not bad at all. I just priced somebody out at a really good mid 3 today. She has great credit and a good down payment and everything. So they're creeping up a little bit. I think in this election year, nobody really knows what to expect. I think the Fed would like to keep throwing out that little hint, we're going to raise rates. And I've said it before, it's not directly related when the Fed raises rates to our interest rates, but it does speak to overall, if you have inflation, or if you have, anyway, it goes all the way down to where people are just putting their money at that particular time. And right now, if we end up with a gridlock, like a Democrat in the White House, and I won't comment on that.
And Republicans, I think the country likes divided government, in my opinion. But anyway,
that's exactly where I was going with it. I mean, it could bode well for the markets, and actually the other way, if the Republicans got the presidency and the Democrats got the House and the Senate, then markets like that too.
Yeah, and that is unlike
the country likes divided. Isn't that absolutely the opposite of what we're supposed to?
No, absolutely not. That's what it's about. Was about checks and balances. Right. I was just going to say, my only comment was, unlike the Oregon legislature, which is controlled by the supermajorities of one party, and look what they did during the time they were there, unchecked, unbalanced. Anyway, that's my own opinion. But okay,
well, I am closing 2 new construction loans this week with a builder, and definitely vote, you guys, because we're having a whole lot of restrictions and things put on us. It's driving up the cost. What is it? 30% now or something of the build.
Brad Bennington.
Yeah, 30% of a new house is just all of the standards, and I wanted a good environment and everything. But just keep that in mind when you're voting, you guys.
Well, those are local issues that come up, in terms of what it costs to do new construction, the developments that you see, Joe. When you go to all those hearings, you see all those things. You see how much money goes into those things. I don't know if you're going to ever change those or stop those, but that's neither here nor there.
It's
just the reality of the world, isn't it?
State and federal fees, though, and the regulatory fees and the checks and the things hoops they have to jump through to build a home these days. The costs continue to escalate and to erode on their already pretty tight margins to try to build the homes that our supply really demands and needs right now.
Yeah.
And I just pulled the politician thing on you. You asked me a question, and I talked about something completely different. So, to answer your question on the rates, we're still in the really, really low threes for the government stuff. Obviously, if you need to do a manual underwriter, there's about 26 variables that go into quoting an accurate rate. So you'll never nail me down as bad as you want to for an actual rate, but they are holding steady. They're really good, and actually Fannie Mae and Freddie Mac, they're loosening up a little bit of their guidelines. Also, we can maybe talk about that a little bit more in our next show.
They've had to loosen those up because weren't they losing business because people weren't using them to finance anymore, were they?
Yeah, well, I think everybody, it's almost a race back to try to be the person to loan you the money at this point. So they're competing against the FHA and the USDA, even though we're priced out of the market a little bit in that one. They've really made their program a lot more attractive. It's still not really there, unfortunately, but I think we're going to get back into, unfortunately, a little bit of looser lending.
Well, but that's going to be bad if that happens. I was going to ask you that. Are you seeing the ones that you're doing? Is it still? Right now you have to have proof you can pay it back. That's the truth.
That hasn't changed.
Is it still as strict as it was? That's my question. Is it still as strict as it was?
Yeah. Well, yes. They're just easing up on some of the stuff, but we are doing common sense lending still. So, you will have to come in and you'll have to show us your tax returns and you'll have to show us your W-2s. And, they're coming in with a little bit more automated values for the appraisals at some level. They're trying to ease up on that a little bit because I think everybody's realizing how much of a strain the appraisal piece is on that.
And speaking of the appraisal piece, if you were with us last week, Trevor Boucher, remember, and Jeffrey Nagel, we were talking about how it's going to take you 60 days to close because the appraisals are taking so long to get. He called me the next day, Trevor did, and he said he talked with an appraiser who said it's worse than you think because there's no apprentices. Remember, they have to go through an apprenticeship of 2,500 hours, and there's no apprentices out there, and no appraisers want to train somebody to take their place and things like that. It's going to be a big mess before this is over. Anyway, we're going to have a show with them, Joe, with these appraisers in a couple of weeks in December.
That'd be a good update for folks. Yeah. We struggled to find value on my last transaction.
But 60 days is what the closing dates there. And that comes down from the president of the SOMLS, Rick Harris, who was here a couple of weeks ago, that you better leave yourself at least 60-day close. Have you seen any of that, Guy, in terms of appraising?
Mostly on the rural stuff. We are a little unique in the fact that we have our own appraisal panel, so I don't go through what's called an AMC. So the appraisers like to work for us. They get the full fee that they charge. So I'm not going to say I'm super fast at them, but I don't ask for 60 days at this point.
Well, what really bothers me is what I'm hearing the people, realtors say, is that if I go pay, on this pool of appraisers that you're talking about, I go pay up to $1,500 and I have an appraiser out there in 2 days. That I don't think is right. And I think
we're not engaging in that.
$200, $300 extra to go get an appraiser to come early. See, and then they'll accept it if you give them more money. That's not right. That's terrible.
That's like sitting on a rental and taking all the application and rental fees and renting it eventually to one. But
all right, Larry Cogdell's in the house. We haven't heard from Larry yet today. We talk about this stuff in real estate. I know you're not in real estate, but you're in the financial world of all this. What is your opinion of the real estate market, Larry, and the things that you see in the world of financial planning?
Well, I think for one situation that's come up that I have found is, unfortunately, and this is a sort of a negative on the other side, not the real estate side, for many people, their home is their largest investment.
Absolutely, yes.
And that can be a problem because most of the time the house that you live in doesn't produce income for you to retire on. So you may have to do a conversion, like sell it, reverse mortgage, something like that. And so that brings my job in on the financial planning side to what can we do to work on the other side. I assume that you already have your home, and then we can work on trying to build up additional assets to help supplement your income and things like that. So the other thing we actually talked about before the show is a lot of people come to me and talk about, do you think I should get into the rental business? And I explain, well, that last word you use is very, very important. It's you're thinking, most people think that the rental or commercial type business is you buy a building and then you just get a check every month and that's how it works. It's so simple. And then, in a few years you sell it, you make a lot of money. They forget all the business that you're actually getting involved in, interviewing people to rent your property and stuff like that. So that's just something people have to be aware of. And the TV shows, unfortunately, make it so easy looking. I mean, you can be a millionaire in a week or a month. I don't know why it's such a problem for everybody else. We do it on TV all the time.
Yeah.
And if you take my course, I can show you how to do it in 3 days. I'm going to be in Medford soon. If you bring all your money. No, I'm kidding. No, that's a commercial I heard.
Yeah, no, that's really true. Do you see a lot of the people who you, work with in terms of financial planning have real estate portfolios of some sort, or not?
I would say about 20% of them do have real estate, and some of them have virtually their entire portfolio in real estate, and now they're thinking about, I got to get out of some of this stuff. And I've had a few clients that have more than 20 or 30 properties, and the situation is the tax issue because it's not their house.
Right.
You do have to pay Uncle Sam, and if they've constantly be doing like 1031 exchanges and stuff like that, you're going to have to pay the piper sooner or later.
So do you work with people in those kinds of things?
Yeah, sometimes we get involved doing things such as charitable trust, where we can perhaps defer that capital gain situation, or they may have a real charitable intent anyway, where sometimes the tax deductions can be very, very lucrative for someone that has a very large portfolio. They don't need it to produce some retirement income. They have sufficient income.
Yeah. What kind of do you ever done any financial planning much? I really haven't done much.
I kind of total it up monthly and hope that it adds up on the 31st.
Those who lived at check to check is doing that. No, you probably wouldn't need Larry's services at this point. Who would need your service? Tell me about that.
That's a little bit of a misconception. Most people, when they hear the word financial planner, are typically assuming I'm talking about managing a portfolio, which is just one of the basic 6 things that a financial advisor who does comprehensive financial planning would do.
Okay, that's
the
one.
investing is one. The second would be just cash management, when you're talking about setting up goals, budgets, what's your debt situation. The other one is tax planning. Things have consequences when you do things and you don't think about it. I needed some money, so I ordered some of my money out of my IRA account, and they forgot. Or they thought, well, gosh, I've got this 401k plan that I used to have at my old company. I'm just going to go ahead and have them send me a check, and I'm going to open up my own IRA, which would be the wrong way to do it because of the mandatory 20% withholding from a qualified plan. Now, the money, the 20%'s at the government. When you try to roll over your IRA, you're 20% short.
See, this is why, Joe, I don't have any of those. Exactly because of the way Larry is describing these things.
It's too scary.
20%. There's 20. Yeah, I would be lost. I think most people end up lost in this kind of thing, and it scares them. And I've been meeting a lot of older people, helping them with real estate stuff. And I always ask them about their financial world, how they are, and very few are prepared.
Well,
seriously,
that's where the tax planning comes in. There are different types of incomes. You get income that could be completely tax free. You could get some income that could be tax deferred, or just ordinary income. And so all these investments don't exist in a vacuum. They all have consequences. And a good financial advisor goes outside of the envelope of just looking at what mutual fund do you have? Oh, that's a good one or a bad one. Well, I always say good or bad for what? What exactly are you trying to do? The next point would be the actual retirement planning itself, where we do a comprehensive plan to show you how to get from where you are to where you'd like to be. And, if you're going to get in an airplane, airplanes are kind of a passion of mine. I'm a pilot. It's just that the planes I fly are only 6 feet long.
Yeah.
So I'm actually outside of them when I'm flying.
But you never have to parachute.
No, I have survived all 8 crashes.
How old are people? Or I mean, we have a lot of young people around, young couples, and we tell them always to be first-time home buyers. You look at those things. Do you send people? How can we help? I mean, suppose in our world of getting people some support or help with this, because I think most of us don't do it. I don't think so.
Well, one of the things, first of all, can you afford to be a homeowner? It's not just your house payment, it's the other things like that property tax that you just got.
You're going to have to hold that thought till we come back here, because we've got a break coming up. I'm always interested about financial planning and money and how you use it to your benefit.
I always feel really guilty after we have a show like this, but in a good way, because I need to get with it.
All right, we're with Larry Cogdell and Guy Giles here on the Real Estate Show today, talking about planning and mortgage rates and all that. We're coming right back here to KMED right after this. The Real Estate Show continues here on KMED. November the 5th is our date. Pete Belcastro and Joe Brett, the real estate guys, with you. Gosh, we're not here next Saturday. It's the KMED radio auction, so we got next weekend off. I'm heading to L.A. Making my trip, Joe, down there to the Rose Bowl.
Your dream is going to come true. You're going to see the Oregon State Beavers play a football game in the Rose Bowl, not on January 1st.
No, but we're going to go. Me and my old college roommates, we're going to watch the Beavers play in the Rose Bowl. Just be quiet. It's fun. Just leave us alone.
I think it's a great idea.
It's a fantasy we have, okay?
And Coach Anderson, the real thing may not be that far down the road. We've got to do some good things.
We're going to
some work to do.
We're going to be all dead before we see that. That's why we're going this year. Anyway, we're with Guy Giles today from Bank 34 Mortgage. He's our resident expert on all things mortgages, and Larry Cogdell from Certified Financial Planner also here with us today. Hey, we talk about first-time home buyers and the reason you want to buy homes, and let's face it, the demand here in our valley is still quite high. I don't think that's going down. The statistics will be out this next week from the SOMLS for the month of October, and I think you're going to be quite surprised. It's still strong. There's no question.
Market for the winter ahead.
The supplies of inventory, Joe, in Jackson County, it's one of the things that John L. Scott shares with people in here. If you're or you have a home in the $150,000 to $250,000 range, it's still less than a month, less than 3/4 of a month available inventory. $250,000 to $350,000, it is 0.7 months available. So that's still dry in the market, and that still is what is selling. You go to the higher rates, the higher homes, and you have more of them on the market. It takes a little longer to sell. So with all of that thing, first-time home buyers, Guy, it's still important that people look, because the rental market is so crazy. Buying a home makes so much financial sense, doesn't it, right now?
It absolutely does. I'm sorry, I just got something stuck in my mind when you're talking about going down to see the Beavers playing there. I was thinking
you just can't see that, can you? No way.
It's always been a dream of mine to see the Ducks play south at Spiegelberg, and we probably almost saw that if they didn't turn that thing around a little bit. So at least they're getting a little bit better. But it's definitely a good time to be doing this. We just kind of wrote down a couple of things, or brought in a couple of things, that are good as far as sorry, my phone went off again.
You got seven. You got 7 things. We have to take Guy here.
I need to turn that thing off.
I hope that wasn't a Samsung 7.
It's not on fire on the floor.
Guy Giles.
So anyway, I guess probably the first, the biggest thing as far as buying a house would be, it's going to build wealth over time. And I'm sure, that you could probably speak to that a whole lot better than I could. I know, looking at my house and any real estate that I've ever bought in the past, it can dip, it can do different things, but in the long run, it's going to be a whole lot better off than if you didn't buy real estate.
Hey, Larry, have you ever had anybody come to you look for financial planning who did not own a home or own real estate?
Let me think about that.
That's a good question. I just thought of that.
Has
anybody ever come to you looking for financial advice who did not own a home?
It's rare.
Yeah.
Yeah, it's rare. By the way, one of the things that a financial planner does is they become, especially if you've been doing this a long time, you have to have psychiatric training. And I'm saying that in a little bit of a humorous sense, but owning your own home has a huge psychological effect.
Yes, absolutely.
It makes you feel more stable, and it gives you the confidence. I own this, and it just your whole tone changes. And so sometimes when we're giving financial advice, we have to make sure we understand what's the psychology behind your motivation of doing something like that, and is that perhaps overwhelming the mathematical reality that it is a great idea or a horrible idea for you to do it.
Interesting, isn't that?
Mine own is a case in point.
Yeah,
I rented my home for 9 years, paid the wonderful gentleman next door who actually was the builder $100,000. Now
and he really appreciates it.
Now I've owned it since 2009. And by gosh, by the time I'm done, I'm getting that $100,000 back, but not from him, from my equity, but from the wealth that it's going to build for me, and that money. Think if I would have been in a position to buy 9 years before that, before I had to pay those 9 years of rent. So it really is. It's a game changer and a life changer to have that stability and that force working for you.
Well, the National Association of Realtors says that the average person of generating wealth, average homeowner in the United States who owns a home has a wealth of $175,000. The average renter in the United States has an average wealth of $5,400. That, to me, is the most startling statistic that I've ever heard. If it doesn't convince you that home ownership or owning property is something of value, then you're not okay. But I mean,
now let us know what you found that does better than that.
We'd
like to know.
Do you deal with stock market much? What are people's, Larry, in terms of stock market or real estate? We talk about that a lot. Would you put your money in the stock market, or do you put it in real estate when you're financial planning?
I have a great answer for that question. Which would you rather have, a Corvette or a dump truck?
Well, okay.
I'd take the dump truck.
I would probably too, but that's not the answer he wants.
No, as a matter of fact, that is the answer. Why wouldn't you take the Corvette? Maybe because you need something that can haul a lot of dirt.
Yeah, well, I can. Yeah.
And so it's a matter of what is appropriate, not which one is better than the other.
More appropriate for my
which
situation.
one is appropriate for your situation? And I have that all the time. Is this is better than this? Well, it might be. What's better, a 15% rate of return investment or a 3%? And I answer that by using a car analogy. If they removed the speed limit and you had to go from Medford to Portland, there was no speed limit, how fast would you drive? How fast would you drive?
The same as I probably do now.
How fast is that?
80.
Okay, 80 miles an hour. Now, what if I told you your car is capable of doing 120 miles an hour? Why wouldn't you do 120 if there's no speed limit? What would your answer be?
Well, it's not safe.
Right? You finally have picked up on the risk area.
Okay.
The risk area. You see, unfortunately, some people's investments are the 120 mile an hour portfolio. And as long as it's a dry day, you're driving straight and your tires don't blow out, 120 doesn't seem that much faster than 80. If something goes wrong, you're going to die. And that's what happens in a 120 mile an hour portfolio that's inappropriately applied.
Wow, I can see that. What else you got, Guy, in terms of that home ownership of why, in terms of financial planning for your future? And Joe, you were absolutely right on. It's a perfect example for you there, and all of us actually. But what else you got?
Well, one thing that you touched on a few minutes ago when you mentioned that there's a psychological thing with owning a house. I mean, there's all kinds of statistics to show that people will stay on their jobs longer. They're just a lot more stable all the way around. They feel like they have something they're working for. And I mean, you're going to go through dips and you're going to go through different things. We all understand that with the market, but you are going to build a little bit of equity.
And think of the renters. Think of the renters that we know that have been displaced by the market, by the rising rents, and by the demand on those properties for investors. That people, you're not set in a rental because it can change. Your owner's situation can change on a moment's notice.
Not at all, and also, the tax benefits would probably be the third one that I'd bring up. I mean, I paid off a second mortgage about 2 years ago, and I'm glad I paid it off. Don't get me wrong, but it was amazing the write-offs that I had from that horrible loan that I'd got back in 2005, and had for a few years, and just being able to write off your interest. There's just it compounds because you have a forced savings plan. That literally you're going to have a little bit more equity in your house every month. You're going to have the tax deductions. So I mean, there's just and also you're not at the mercy of somebody that is going to just raise your rent or decide to sell their house right in the middle of you being comfortable. Your kids are looking at changing school districts. That's one of them that I see a lot.
Do you guys, either of you see a lot of second homes, vacation homes, being out there that your clients are looking at? Because it's different than owning your own home and things like that. But second homes, vacation homes.
I'd say probably 30% of my clients have more than one home. They have a second house or a little vacation place out of the coast someplace, something like that, or cabin, something like that. And they like it.
They like it.
I want to be one of your clients.
Yeah. It doesn't take a lot
My
to
number
get
is 541.
It doesn't take a lot to get that either, to get to that state, really, when you think about it. Anyway, we're talking with Guy Giles and Larry Cogdell here on the Real Estate Show. One more segment to go. All that stuff coming up here, not here next week, back 2 weeks from today with the Rogue Valley Association of Realtors program. So we're coming right back here to KMED right after this. Real Estate Show continues here on KMED. November the 5th is our date. Pete Belcastro and Joe Brett, the real estate guys. Don't forget, you can check out any of our past shows at realestateShowOregon.com. They're all there for you to see. Some terrific shows that we've had the last few months. So everything from the presidents of RVAR and SOMLS, the sheriff, peer lending. We've had a show on that, pre-home inspection, all those kind of things that I'm learning, right?
We continually give our listeners far better reasons to tune in than just Pete and I every Saturday morning.
Well, I'm going to have to probably replace my deck now at my house.
No.
The whole thing.
I'm your agent. I'm going to advise against that.
It's 35 years old.
Are you going to really get the total value out of that back out of your sale?
We'll see. Who knows?
Let them build their own deck. We just can build a deck for them. It's really nice.
That's why you and I don't pretty much agree on anything, do we? No, that's the perfect example right there. That's funny. Anyway, well, we're with Guy Giles from Bank 34 Mortgage today on the show, along with Larry Cogdell, who's a certified financial planner. Okay, just have to get back to Guy, because this segment we go so fast through here is, what are the loans right now that people are getting that you're out there with that people may want to take advantage of?
Well, we still are doing the second home thing a lot. Like you're saying, I have.
Larry, look at that.
I have people that aren't quite ready to retire down in California or different places, and they'll come up here and they'll buy something now because you can get kind of the same great rates you would on your house, on your owner occupied one that you would on a second home.
And they think that if you wait, you're going to pay more in another year
higher
or
prices
two when you retire,
and higher interest rates
and
by
that's
then
why
possibly.
People are doing
that's
that.
a great time to buy.
And what are the rates on second homes, kind of thing? Is that something? It's not 3.5%, I don't think, is it?
They're a little bit. They're not necessarily higher, but the regular ones aren't 3.5% anymore. So your owner occupieds aren't there unless you're looking at one of the government loans.
Okay.
You're looking at the really low threes still for the government, and you're looking for kind of a mid to high one for those. I mean, it's going to come down to credit score.
You're saying for that. Okay.
Yeah. So obviously, if your credit score sucks.
And tell me what the credit score should be to someone to walk into your office and say, Guy, for you to give me a loan, what should my credit score minimum be?
Well, I mean, technically, if you're buying a second home, you're going to really at least want a 620 credit score. I mean, that's a horrible thing. You're not going to get that great of a deal. Right. If you can have at least a 680, 700 credit score, you're getting into a little bit of a better deal. And then 740 and above, you should really get the best thing out there. So there's something for everybody. But if you have a really low one and you don't have your full 20% down, you're going to have trouble finding mortgage insurance. So it's best to just give me a holler and let me look at your actual scenario so I can go into it. I hate giving a minimum credit score, because if you don't have a certain amount of a down payment, then that's going to change that. Right. And anyway,
quit apologizing to people for the mid to high threes for their interest rate. Pete paid 18% on his first home purchase, I think.
Oh, man.
So you don't have to feel bad that they're creeping up towards 4%. That's still the historically incredibly good interest rate.
One of the other things,
if it goes higher, the game is over. If it goes
the
over
game's
5,
going to change. Eventually, it has to.
Yeah.
I had somebody in there doing a renovation loan today, and again, there was a few variables, so we were in the low 4s as far as that goes, and she was just, hey, when are rates going to drop again? When are rates going to drop again? And the same thing, since when is a 4.25 a horrible rate when all the stars didn't line up anyway?
Yeah. All right, Larry, let me ask you this question here regarding commercial people and business people in financial planning. Do you see, we have lots and lots of young people who are entrepreneurs and are out there working, their tails off and making some money, hopefully. Should they be candidates to come and talk to you about financial planning and trying to get that portfolio set as early on?
Yeah, time is your biggest, the most important thing about financial planning from an investment management is how much time you have. For example, if you took $100 a week and just stuck it in an investment that made 4%, $100 a week, $5,200 a year, and if you started, let's say when you were 55, you'd have $62,000 in 10 years. But what if that same person would have started when they were 35? They'd have $154,000. If they started when they were 20, they'd have $500,000, $100 a week. Yeah. So, but for the businessman, especially a new entrepreneur, obviously most outside investments won't compete with a successful entrepreneur's business. There's where the psychology comes in. And I said, you know what? You can sell widgets and make a lot more money than any investment I have, but something could go wrong with your widget. That phone that you're selling for this great price, it has this battery problem, you're out of business.
Yeah.
Or, so I always say, take some of your money and diversify. That's what I would suggest. And also, of course, when you've got a brand new business, you have all kinds of unknowns and you're growing exponentially, and most people are focused on getting that business going. So I'd like to see a little more stability before I start saying, let's start taking all this money off the table and giving it to me, because you can do better with it.
Yeah, interesting. You can do better by doing that.
Grow your business,
and growing your business alone. That's really true.
One other thing that was kind of cool about what he's doing on the side, are you allowed to talk about your little side project you got?
Well, I was going to say, Larry
I have permission.
Larry is the area's first FAA certified drone flyer, correct?
Yeah,
drone pilot.
Under the new regulations of Section 107, I'm pretty confident I'm probably one of the first, since I got it the second day that the FAA allowed it. Unless someone beat me and got there the first day.
Right. So what are you going to do with this license? You can fly legally all around the valley, I suppose.
As long as I'm not in controlled airspace. Okay. Yes, right. I'm selling video aerial photography.
Okay, so you take like real estate pictures or things like that.
Real estate could certainly be one. A roof and home inspection, or you want a roof inspection without having to get the ladder up.
Okay. Oh, I see. Things like that.
Stuff like that. Or you just want to send out an unusual Christmas card.
Now, are all people supposed to have these licenses who fly drones around who are doing this? Is that right?
Anyone that does it for any compensation must be legally licensed and have a FAA pilot license. Their drone must have its own registration number from the FAA.
Okay, wow.
And it might be a good idea for you to ask them, do you have insurance?
Yeah, it might be good too. Look at that. I didn't know that. Did you? I didn't know that.
And you might want to not go messing around Larry's property, because there's probably an attack drone in the back that, just in case.
That's pretty good.
Homeland Security could intervene.
That's a whole
By the way,
world
can
out
I
there.
mention the name and the number?
Sure.
The name of my new company is Aerotech Videos. Aerotech Videos, and you can reach me for that business at 541-840-1514.
All right. Well, good luck with that.
Thank you.
The first FAA approved pilot in Jackson County. Pretty good. I don't do any of that thing. You don't either. I know Guy doesn't either. We're kind of like land guys.
He's a pilot his feet never leave the ground. That's the best possible pilot.
I love it.
Yeah.
All right. You can also find Guy Giles. You can Google him at Bank 34 or Guy Giles at Bank 34 Mortgage.
Hey,
that'll do it for the real estate show.
Nice.
Down south.
You all have a great weekend. Pete Belcastro, Joe Brett. We'll talk to you next weekend. Well, 2 weeks from today, by the way, here back on KMED. Have a great weekend, everybody, and God bless.
You've been listening to The Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshoworegon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED. And thank you for making the Real Estate Show part of your weekend.